Hi, everyone, and welcome to The Hash, your daily beat on crypto and culture. My name is Naomi Brockwell, and I'm delighted to be joined by our other wonderful co-hosts. We have Ben Powers, Jen Sanasie, Will Foxley, and Zack Seward. Welcome, guys. And we're going to kick off the show by talking about Coinbase's much-anticipated direct listing on the NASDAQ and their financials, the S1 form that was released. So, Zack, walk us through that, because I know you're an S1 fanboy there.
I am an S1 fanboy. This is true. So the public listing is not yet live. You cannot buy Coinbase stock just yet. What happened earlier this morning was the S1, which was filed confidentially with the SEC earlier this year, was published by the SEC, and we've been gifted with all sorts of nuggets about how Coinbase works as a business. So an S1, if you guys haven't read one before, is really fun. It lays bare all the facts and figures about previously private companies. So there's a lot of good nuggets in here, a lot of good tidbits. And I could go on about them, but I'm not going to just yet. So I wanted to kick it to Naomi real quick. When you look at Coinbase inching ever closer to the public markets, what's something that you are thinking about on this Thursday?
Ooh, I'm thinking about mainstream adoption and how this is just a giant moment. Coinbase, I mean, people always think of it as this giant institution now because it's done so well. But back in the day, like, it starts out at this really small startup that's just dealing with crypto. And it's actually really exciting for me to see it go big time like this. They talked about their financials in 2020. So they had a net income of 322 million, but they incurred a net loss of 30 million in 2019. Which sort of brings home how completely tied to the price of Bitcoin even like an exchange is, right? Whenever you have a company that is in the crypto space, it was really intrinsically tied. And I've always thought of Coinbase as, they're going to make money no matter whether the market's going up or down. But the net loss made me actually question that. So.
Yeah, I think this is just going to be one of these big Bitcoin proxy stocks that people in the market who don't want access to Bitcoin itself but want access to the upside are going to look to in a big way. They applied for the stock ticker COIN, which is one fun fact. The S1 was sent to the address of one Satoshi Nakamoto, which was listed in the form itself. And there were other gems, such as CEO Brian Armstrong, bringing home about $60 million in compensation in the year 2020. Ben, I want to kick that down to you. What are you looking at when you go through a document such as this and you get to see all the juicy details about a company going public?
Well, I mean, my little cynical take in some of this is that it's really easy to be an apolitical company when you're pulling in 60 million personally. Just a side note, call back to their previous blog post. That being said, I thought another interesting tidbit here, Zack, that you told me about was, spending 1.8 million on personal security. Obviously, Coinbase has a huge amount of funds on hand and is raking in profit seemingly as Bitcoin has continued to go up through 2020 and 2021. So I think that just demonstrates and kind of puts a highlighter on the amount of time and effort it takes to be secure in that environment as the head of that company. So that's something that definitely stuck out to me. But, Will, you're probably following this closely. Do you tell me what maybe your favorite fact was?
Yeah, I just want to correct Zack. There is a way you can buy Coinbase shares right now. If you go onto any decentralized finance platform, you can surely find a stock for it. So,
those aren't the real deal. Those aren't the real deal, friend, just so you know. But good luck on FTX trading the pre-listing Coinbase proxy. Have fun. What's it at? It's like 300, 400? It's pretty high right now, right?
Yeah, I think it is pretty high. And like my kind of take on this is it's so interesting how in the 2010s, I guess you could call it, it's just software packages that are bringing in this much money. I think Coinbase is valued at between 70 and 100 billion before it's going to public, which is just like mad to think of, a GitHub repo being worth that much. And that's really what it is. Obviously, there's a lot of assets and staff on hand and a lot of leadership behind bringing this whole product to market. But the fact that you just have like another software suite is worth this much money is just pretty incredible to think about.
Yeah, software is eating the world, and one of the biggest beneficiaries of this particular listing is indeed Andreessen Horowitz, who coined that software is eating the world some time ago. Jen, what do you look to when you look to Coinbase inching closer to the public markets, and what really is, as Naomi mentioned, a big day for the cryptocurrency industry?
Yeah, I mean, Zach, I just really kind of echo what you said. I think investors who don't really want to get involved in crypto now have a way to experience benefits by getting involved with Coinbase. I read, I don't think it was in the CoinDesk article today, but I read somewhere that I think they said it was more than 5 Fortune 500 companies are clients of Coinbase. Naomi, do you know what I'm talking about, or do you want to add
No,
something?
this is another thing.
Okay.
So you continue.
Yeah, they said more than 5 Fortune 500 companies are clients and are trading in like 9 and 10 figures. And I thought that was really interesting because we kind of talk about the same 3 companies on this show, but that kind of said that maybe there are more players than we talk about and who speak about it publicly. So I thought that was cool.
I will mention that I'm not sure whether I'm bullish on Coinbase, simply because when you had the Trump administration in, you had Mnuchin who tried to put through this wallet rule, which basically would create a walled garden around institutions like Coinbase and stop people from essentially taking money out and putting it in any wallet that hasn't been KYC'd. So, like that could really put a huge dampener on centralized exchanges, on people who are part of the KYC world. So if that goes through, it's currently frozen. It froze when Biden came into power, so we don't know what's going to happen there. But if that goes through, I mean, that would be devastating for Coinbase and other exchanges. So we'll have to see what happens there.
Yeah, definitely
anyway,
lots to watch here with this one. But
yeah, I want to change tracks.
There you go. You got it. Naomi, change it up.
I gotta get it done. So I want to talk about some juicy stuff from today. So yesterday we had Craig Wright. He sends this letters to the developers of BTC, and he basically says that Tulip Trading Limited owns this address. He mentioned a couple of addresses. One of them was 1FEEX, and the idea of the letter is, the idea behind it is essentially him hoping that he can force developers to release a version of Bitcoin that assigns these addresses to private keys under his control. He claims that he's lost access. He wants them to change the code and all of that. But the expected outcome of this is that he's admitted to previously being in control of the account, where a giant hack from Mt. Gox in the early days where the stolen funds were sent to. So this begs the question, either Craig Wright is lying about owning that address, or he's the hacker from Mt. Gox. They're the necessary outcomes of this, right? So we've got a bunch of things happening as a result of this. So we know that address was linked to the hacked Bitcoin. That Bitcoin was hacked. It was actually when Jed McCaleb, he was the original creator of Mt. Gox, he handed it over to Carpella's 2011, and that the funds, it was actually a hot wallet that he lost control of at the time, and the funds were taken to this FEX address, which Craig Wright now claims to have been the owner of. So the result of this is we have lawsuits coming from people who lost money from Mt. Gox, saying, we want our coins back. You clearly are the owner of, or the hacker of this address. So it's interesting. There are a lot of results that could come of this. Zach, you want to walk us through what some of the necessary consequences of this revelation are?
I don't know what the consequences are. I don't know what is going on. All I know is about Magic the Gathering, and I think that is one of my favorite pieces of Bitcoin lore. So I'm going to pass it to Will. Will, I saw that you got bodied in the Slack by Naomi over when this hack happened. So I want to air that out. What's going on?
Yeah, so
welcome to a daily dose of Will and Naomi at each other.
Hey, I owned up to being wrong, and I expect it one day with Bitcoin Cash from you, so no worries. But passing over here, I think Ben has kind of more of the scoop on it, but from my understanding, and from Colin Harper's piece on the subject, there's a few hacks with Mt. Gox, 2011 and 2014, a few in between, as Naomi and I were talking about. And some of those coins are tied up in this Tulip Trust. And for some reason, this man thinks that he can alter the entire Bitcoin code to get his money back. What I think really is just going to happen is BSV could fork, and Craig Wright will just get more BSV tokens because he basically is controlling that chain right now as it happens. So I think that might be like the long-term effects we see, is that BSV just kind of goes through another hard fork of sorts. But I think I'll toss it down to Ben to understand what's going on with the addresses.
I mean, there's not a whole lot to understand. I think he admitted he owned this wallet in the same way that he's admitted he's Satoshi Nakamoto. This is just an ongoing thing of lawsuits that he's been filing all over the place, which is seemingly the way that he stays in the news and a part of a conversation generally. But there's no evidence that he actually owns this wallet. This was part of a legal filing. But if he did, he would have the private keys and have access to these funds, which he does not seemingly have. So I think this is just a whole lot of noise, but I think the blowback on it is interesting, because if you pull the trigger finger on lawsuits and cease and desists, it's sometimes going to come back to bite you. And we're starting to see that with people saying, oh, if you're claiming you actually owe this, then we have a whole other conversation going on. So this is just part of an ongoing saga that is seemingly going to keep going and just seems to be kind of filling the ecosystem with hot air that I don't think will actually result in anything.
Yeah,
should we take a vote?
So much. Go ahead, Jen. What are we voting on?
I was just going to say, is Craig a hacker or a liar?
Why not both?
I am not in the prediction business anymore, so I'm not putting my vote behind either of those outcomes. But I think for maybe the general people. For maybe the general people watching, what Wright's kind of asking the Bitcoin developers to do is it's like kind of going to Cash App and saying, hey, let me into this other person's bank account that you have no control over in some of these ways. So it's just kind of a ludicrous thing on its face to claim that this is even possible. So just that's some of the underpinning and trying to get a general audience to understand maybe the skepticism by which we're all encountering this with.
I think that it just kind of brings home like another example of all of the ways that Craig's shenanigans have come back to bite him. I did this live stream coverage a couple of years ago when they were it was part of the Kleiman hearing. They're going through all the evidence there, and the sheer number of red flags that was like where it's like he was fraudulently mentioning like, oh, well, I had this conversation on this messenger that wasn't even invented at the time. And, all these documents that had been forged, like there comes a time when you have to think, well, there are all of these red flags and ways where he's proven to lie. How much do you trust someone that does that? It's always baffling to me how people continue to have blind faith. It's almost like the sunk cost fallacy. Like, well, I believed in you this long, I'm going to keep going. This is another example where he's claimed to own something, and now it's proven to actually be an address linked to a hacker. So he has to come clean. Either he was incorrect when he said that he owned these coins, or he was the hacker. Because it can't be anything other than that. So it's one other thing I'll just quickly mention is that it really bothers me that he uses the legal system in crypto and claims to be part of its core ethos. That's exactly the antithesis of why crypto was created. It was created so we didn't have to rely on the fallibility of people to settle things. We rely on mathematics. That's why it made it better. That's why it's enabled all this decentralized action. So the whole thing, I mean, it's amusing to say the Linda, and at least I'm entertained.
Cool. Well, we are going to give this segment a rest, and we are going to go to a quick break. And then after the break, we are going to talk about a major exploit in BitcoinPaperWallet.com that is leaving some folks without their funds. Stick with us. It's The Hash.
If I think about what I would like to cover in history, 20, 30 years ago, it would have been the internet. It would have been the whole social media boom. Now this is our turn. This is this generation's turn to cover the future of money, Web 3.0. We're going to see a huge paradigm shift. We're going to see how it lives digitally, natively in the internet. We're going to see that transformation shift. We're building a financial system across the world with Bitcoin, several other cryptocurrencies, digital currencies made by central banks, and that is going to be epic.
All right. My colleague Colin Harper published a story yesterday about a vulnerability and exploit with BitcoinPaperWallet.com. Now, BitcoinPaperWallet.com is basically a web-based wallet that prints out your private key so that it can't be, attacked through malware or something on your computer. And your private key is basically your password for accessing your Bitcoin funds here. Now, what Colin found is that through a back door, according to security researchers, the website was putting a copy of that private key on its web server such that anybody with access to that server could access your wallet. And he spoke with victims who have collectively lost over $6 million in Bitcoin at the time of publication. So I'm curious to get people's thoughts on this. This is a pretty large hack, and it's been ongoing for a while. But Naomi, you look at these things closely and you care a lot about security. So what are your first reactions here?
So I've actually used that site many times. I did a video on how to create paper wallet years ago, and this was like the place that people would go to. And I never released the video because after talking with a lot of experts who understood this a lot better than I did at the time, it was very clear how intrinsically unsafe paper wallets are to begin with. And I don't think people realize that. And this was something that was thrown around a lot in the early days, like, oh, paper wallets are the most secure. It's like, actually, they're not, right? And a site like this, the main issue that I had with it, which is why I didn't encourage people to do this at the time, was that your printer actually stores a copy, an image of everything that you print. All modern day printers do this. If it doesn't, then it's an older printer. And they're all Wi-Fi enabled these days. So that makes it prime target for hackers. And a printer isn't going to have the same security as a computer or a phone. And so it's like, it's ripe ground for hacking. So I was like, okay, you don't really want to be printing out your private key and having that sitting in this unsafe device. So paper wallets in general, I have really jumped on the bandwagon of just don't go near them. Write down a seed phrase with your hand. Pen and paper don't store digital files. Definitely don't print things out, even though you think that, well, I'll just delete it from my computer. It's like, well, no, it stays in your printer. So that's my take on this. It's not surprising that other vulnerabilities have been found.
Yeah, Naomi, we're tossing around terms like paper wallet, and we talk a lot about wallets on this show generally. Could you lay out what some of the different kinds of wallets are for people that might not be familiar with it from the outset?
Sure. So a paper wallet essentially is just a piece of paper that has your private key written out on it. And on this particular type of wallet, it has a QR code for your public address, and it has also your public address listed out in text as well. There's this cool thing where you fold it over and it should essentially seal it. You put this holographic sticker on it, whatnot, and then it's supposedly safe. And so essentially paper wallet is just like writing out in plain text your address. You've got brain wallets. The idea behind a brain wallet is that you're going to remember your passphrase, and that is going to stay in your brain. Wouldn't recommend that either because you're relying on a human brain.
Brain wallet is just memory.
Just memory. And it's
just
not
memory. Just memory that.
Right. So the phrase is actually. The phrase is actually generated by your address or vice versa. I can't remember which one, but essentially you would remember words, and the obvious insecurity of that is that you forget, then your wallet's gone. So just storing it in your brain isn't the greatest idea. You got seed phrases, which is how most things like hardware wallets, etc., work. You have a backup. Again, it's generated. The seed phrases are generated based on your private keys. So it's a bunch of words that you write down on a piece of paper. I think the best way to store your crypto. And then other wallets, so phone wallets, hardware wallets, web wallets. You got desktop wallets as well. Like phone wallets have a little bit less functionality, I found, than desktop wallets. I could do a lot more when I have apps like, if I use BTC, I like to use things like Wasabi because of the privacy features. If I use Bitcoin Cash, I like to use like Electron Cash because of the coin shuffle feature there. So privacy is a big concern, which is why I gravitate towards desktop clients. But this crypto world is complicated, and there are lots of different ways to be keeping your crypto, and it's a lot to dive into, which is why I'm not against people using custodial places when they first get into this. This is a very complicated thing to wrap your head around. Protecting your private key is super important, and if you don't understand it, maybe you should entrust it to someone who does. you've gotten your feet wet and learnt more about it. A lot of people disagree with me, and I'm happy for them too, but I think that a big risk is your own understanding of these systems, and that's where a lot of people trip up in terms of security.
Yeah, and Zach, I think you dug into this piece, so tell me a little bit about your thoughts and takeaways from it.
Well, I just think it's really unfortunate for the people who suffered this attack, and so I think I'm sympathetic with them. I think the bigger picture for me, and I think Naomi kind of captured it really well, is that like each of these systems has trade-offs, right? There are certainly risk factors for all of these options. There are certainly strengths for all of these options, and it is something that is hard to weigh for a lot of people entering this space. So, when we see an exploit such as this, I think it's something that should get people thinking about the trade-offs that they're willing to make when it comes to storing their assets. So, yeah, that's me.
Absolutely. I should say that, yeah, go for it, Will.
Just something to trigger Naomi. This is actually why I'm slightly in favor of custodianship in Bitcoin, because you have instances like this where people lose stuff. Okay.
Mm-hmm.
There we go.
No, I'm on the same page. I think that the people it's the biggest obstacle to privacy when people are like, well, in order to actually be secure, you need to buy a new laptop with cash and not have your phone with you because your cell data is being tracked and they'll know where you are. And at this stage, people go like, okay, no, it's not for me. So teach people what is within their breadth of ability. So I'm on the same page, Will, for the first time ever on the hash.
Yeah. And I should say that Colin went to the company and asked them about this. They said they weren't able to recreate this vulnerability and that they had an independent security contractor who was doing analysis on it. CoinDesk did not receive that analysis when we asked for it by the time of publication. So, Will, what do we got next?
Well, moving over from Bitcoin land to Ethereum, Optimism, which is a Bitcoin scaling company, raised $25 million from Andreessen Horowitz, one of the largest VC firms in San Francisco. Essentially, Optimism allows Ethereum transaction speeds to be increased by settling things off-chain and then moving it on-chain with about the same levels of censorship resistance as Ethereum main chain. So that's kind of Optimism in a nutshell. I think the larger takeaway here is that one of the largest VC firms out there, one of the most well-known, that's often sparring with major news media like the New York Times, is doubling down on Ethereum at a time where we're seeing a lot of quote-unquote Ethereum killers or Ethereum alternatives are also popping up. So that kind of tells you about the effect and also the place that Ethereum holds within Silicon Valley still to date. But going to toss that over to Zach, who actually wrote this story. What is your takeaway seeing A16Z hopping in on the Ethereum train with more cash?
Yeah, super interesting. To me, I think we're seeing like a little like two-horse race between like Optimism on one and Starkware on the other. Like there are other throughput solutions that we cover pretty regularly. So like, we filed that story yesterday, but earlier yesterday, Will, you had a story about, I think was it DYDX? Was it DYDX went with Starkware? Synthetics had gone with Optimism. So you have all these exchanges who are trying to find the layer 2 solution that works for them. And, some added money in the war chest. I think there was some hiring associated with this funding round. Added money, added talent in the war chest for what's regarded as a pretty capable team in Optimism. It's going to be really interesting to see how the L2 race kind of shakes out. I mean, that's sort of my perspective. I think we're seeing Polygon, which was formerly known as Matic, also drawing a lot of interest in this conversation. But really, I think Ethereum, is becoming a key piece of financial infrastructure, and people are trying to find ways that, more transactions and more volume can be supported on a really key piece, on a really key network. And so that's what this sort of layer 2 race represents if we zoom back a little bit. So, for some major capital to be pumped into one of the teams, I think is going to be interesting to watch in terms of who kind of follows that signal and builds with Optimism as opposed to Starkware, as opposed to some of these other solutions. So that to me is sort of the big picture. But Will, I know you're well versed in this stuff. What did you think when you saw that headline drop?
Yeah, so I think you brought up a great point. Ethereum is quickly becoming infrastructure for settling anything over the internet. I think it settles about $10 billion a day. And then last year alone, it settled like, I think over $1 trillion, which is huge. That's equivalent to like what Venmo does. And that's expected to grow because a lot of these networks are not for payment on Ethereum. They're for settling financial infrastructure like trading, like DYDX, or Synthetics, which is a synthetic trading venue. So I think we're only going to see the number of, or the volume settled on Ethereum grow. And so that is what everyone in Silicon Valley is trying to throw money into, because there's a lot of money to be made for anyone who's participating in these layer 2 solutions. Matic and Loopring are 2 solutions that are already up and running, and they have tokens that you can go buy, and those tokens make money for anyone who invested in those layer 2 solutions earlier. If Optimism or Starkware, somebody else throws out a token in the near future, I wouldn't be surprised. I don't know if that will fit into their architecture, might not. And they might not do a token either, because it might not just fit in at all. But there's a lot of money to be made on layer 2 solutions for Ethereum. And I think it just kind of points to a lot of the bigwigs are betting on Ethereum. They're not betting on anything else. So I'm going to toss that down to Jen.
I just had a question. Does this mean gas fees are going down in the near future?
Yeah, that's a great point. Gas fees should go down with this kind of thing. Eventually, gas fees should go down. Go ahead, Zach.
The idea is that these transactions are, I think, like batched and then like processed off chain and then settled like in a lump sum. So like, it would be really cool if some of these like more, I don't want to say trivial, but like maybe like more fun applications that run on Ethereum could be settled for cheaper, because that's sort of the context in which we're having this conversation with like gas fees through the roof. So all these projects are kind of seeking solutions to that big problem. But Naomi, I'm going to toss it to you. I think you know what's next.
Yeah, well, I mean, all I can say is that I'm really hoping that gas fees go down, because Ethereum is awesome and I want to see it functioning well. But we're going to take a short break now, and coming up next, the hot digital art NFT market is breaking new records. More details on that to come.
Welcome back to The Hash, where we bring you the latest and greatest in crypto and culture. Well, Beeple sells an NFT for the record-breaking sum of $6.6 million in Ether on Nifty Gateway. The company tweeted today that history has been made with the sale of an animated piece which depicts Donald Trump laying face down in the grass in graffiti. So did you guys see this? Oh, you can see it on the screen there. There's Donald lying face down in the grass in graffiti. Went for 6.6 million in ETH. And I guess my question for you is, the art world has traditionally been for the uber wealthy, right? And now we're seeing these NFTs going for these extreme prices. And it just seems like so unattainable to people who are reading these headlines. And like, I think the everyday person just feels like, okay, I can't be involved with NFTs because I need $6 million to just participate in this. So I'm just so curious what you guys think of these extreme prices with NFTs lately.
It's amazing. I didn't expect that this would happen, right? Like, it's kind of crazy. We're still trying to wrap our heads around digital goods being these coveted things the same way that physical artwork is. But, slowly people are getting there. I also saw that Grammatic, music group. So he tweeted out that within a few seconds, he was able to raise a whole bunch of money, which made up for a year of not touring during COVID. So, I mean, on one hand, you've got these luxury items. On the other hand, you've got these things that are actually helping people survive and, sustain their livelihood. It's a fascinating world, to be sure.
Yeah, also on the Beeple front, so another Beeple set of NFTs is being auctioned by Christie's, the storied, really old auction house. So that auction, I think, opened today, and like within the first 10 minutes, like there were bids for $1 million for this piece of work. That auction closes on March 11th, I want to say. I put this on the calendar just to check to see what the price was when it closes. So it'll be interesting to see if in the traditional world of art auctions, this Beeple work also fetches a ridiculously large sum, because that sort of crossover would be really interesting to watch, I think.
I think it's awesome. I mean, I think, Naomi, just to what you were saying before, I think because of COVID, that's why NFTs are so popular right now. But I mean, we're talking in the millions of dollars. So if someone wants to, participate in NFTs, like where do they start? Like, do we need $1 million to get involved?
No, you don't need $1 million. No, I mean, you could go to Top Shot, and if you are able to, beat the crowd, you can buy a pack of basketball cards for like $20 or like $10 or whatever. But the demand is really quite staggering. It's sort of on the marketplaces where we're seeing a lot of this crazy resale volume happen. That's where some of the big numbers occur. But there are plenty. I mean, you can just go to OpenSea, you can go to Super Rare. There are plenty of marketplaces where you can get your hands on some of these digital goods. My colleague Brady Dale actually just published a really interesting piece this morning looking at sort of 11 different platforms where NFTs and DeFi are creating sort of vibrant marketplaces with a lot of liquidity around some of these things. So I think that is also a key factor in this recent boom, that you can buy a really expensive NFT and financialize it through various mechanisms and maybe make a little bit of return and have some of the liquidity that historically has plagued the NFT space. So interesting to watch. I mean, there's definitely places to go. You can definitely find them. Ben, I think you were going to say something.
Yeah, Brady also did a really interesting piece, I believe, this week, but looking at some of the maybe pitfalls of NFTs and their sort of permanence and where they're actually stored in the event that some of these things might go under these companies at some point in the future. Zach, could you tell us a little bit about where that piece landed? I believe you edited it.
Oh, for sure. I definitely edited that thing. Yeah, it's a good piece. The idea is that, like NFTs, the hash of the NFT is stored on a blockchain in a sort of permanent and continuing fashion, but oftentimes it's pointing to a piece of digital art that is stored somewhere else, oftentimes in sort of centralized ways. So that presents a challenge, right? If you have the hash, but the JPEG dies because the person who made it can't afford their server bill or some other thing, you're in trouble if you spend a lot of money on that NFT, because you can't really sort of like, provably point to the thing that you bought beyond the hash. So, there are options to store these in decentralized fashion, whether it's on Arweave or interplanetary file system. A lot of these platforms are thinking about this question of NFT permanence, so that your rare CryptoPunk doesn't disappear into the ether. So let's go down to Naomi. What was that?
I just wanted to ask the question, like, where do you put these things? Like, because you're mentioning that they're stored in these centralized servers, but generally when you buy expensive artwork, you have that nice vase on display. You have that big portrait hanging in your entranceway. People admire it. It's this signaling device. What do? Do you have like a permanent computer and a giant monitor set up to like just be playing it on the loop?
I think that's it, Naomi.
How do people use it? That's it. Will, do you have an idea on that?
Yeah, I should have an article coming out on that today, actually. But the idea, I think, is that you can use it in your online world as some sort of posing function, kind of like a lot of people use art in their house as a posing function. So maybe it's like your avatar, you have a really expensive CryptoPunk, and you have the hash to that in your profile or on your personal website or in your Discord chat, and people can point to it and see how much you paid for it. And then that kind of gives you an online reputation that maybe you're an ether whale and you've been in cryptocurrency for quite a while. So that is more or less the idea for it.
So they're all posers.
We can all dream. Once the show really takes off, we can start spending splashy sums on personalized collectibles for ourselves. So anyway,
that's what I'm buying
for the show today. We are gonna be back here tomorrow, I think. But yeah, that's it for me. I'm Zach. We got Naomi, we got Ben, we got Jen, we got Will. The gang's all here. We'll do it again tomorrow, and tune in to All About Bitcoin at 3 p.m. on CoinDesk TV if you want more stellar content. All right, see ya.
Bye.
See you later.